Hey, Bulls and Bears, we are back, yes, with another dose of you know what. Let's go ahead and get right into it today. Banks are warning about an economic storm that's headed our direction. Now, if you've been on this channel, you know we've been pretty accurate, kind of laying out the course of events that are happening here with the economy. Right now, we're just in the beginning of the layoff um, tsunami, as I like to call it. And what we're going to see next coming down the road here, a foreclosure crisis, a auto repossession tsunami, a late rent tsunami. I think that's going to explode again. In fact, it's so bad that the White House is talking about introducing or implementing a national eviction moratorium. We talked about that just a couple reports ago. Just insane, folks. I mean, we thought these things that were rolled out in 2020 were just to get us through a period of a health crisis and major shutdowns and job losses. But now we're seeing the similar and a lot of the same programs and prevention programs being talked about and actually still in place in a lot of areas. If you look at some of the cities, a lot of cities do still have the eviction protections in place. We just talked about Los Angeles a few weeks ago as well. So to prevent the fallout, you know, and the surge of foreclosures and homelessness that's going to come out of this eviction crisis slash foreclosure crisis, I think we're going to see new laws passed and new measures passed to try to prevent the fallout from happening. And what we usually see during these times is less and less private control over things, the economy, business, etc., and more state control. So we'll have to see how it goes. But here's the latest in this chapter here of this economic collapse. We have banks out there warning that there's going to be big problems here very soon. And the banks are cutting jobs like we haven't seen in a very long time. Let's take a look at this report. And we'll start off here by looking at this recent headline here out of Financial Times. Banks prepare for deepest job cuts since financial crisis. Well, when this is done, I think it's definitely going to be worse than what we saw during the financial crisis. And just our previous report, we talked about how mortgage volume has plummeted already below where it was during the previous housing bust, and how that's causing a lot of real estate agents, a lot of people tied to the mortgage industry, a lot of bankers, also losing their jobs or simply not having any work. And it's looking like the financial industry as a whole really needs to brace for what's coming down the road here. From the article here, banks are gearing up for the biggest round of job cuts since the global financial crisis as executives come under pressure to slash costs following a collapse in investment banking revenues. The layoffs, which are expected to be in the tens of thousands across the sector, reverse the mass hirings banks made over the past few years. And it's exactly right. Over the past few years, there was this fake, manipulated, artificially created economic boom. People having money to spend that they really didn't earn, people not having to pay so many of their bills, not having to fulfill their financial obligations. The run up in debt like we've never seen before also added on top of the ways that this illusion of an economic boom was created. And we've got this fight now against inflation, and that's going to involve interest rates being higher and remaining high for a very long period of time. But see, people never forecasted that. They never priced that in. They always figured it was going to be rock bottom interest rates forever. But it's the only weapon that they have against rising costs of living that was actually created by interest rates that were too low. Well, now interest rates are going to be too high. Now, there's lots of other reasons. There's supply chain issues. We saw a record number. Let's just bring this home closer to home here to something that everybody can understand: the cost of eggs. We saw a record amount of egg farms go under for various reasons over the past couple years, and we reported on it here: the fires, the poultry illness outbreaks, where they had to cull millions and millions of chickens and hens at these poultry farms. And just a small example of what's happening to the broader economy. Now we're seeing this outrageous cost of eggs here, not in every state, but in many states. And with this outrageous cost of living, we're going to see a lot more farms go under, just a lot more everyday people go under, and it could be even a wipeout or a partial wipeout of the entire middle class. And the layoffs are just getting started already here in 2023. We see a massive amount of layoffs. Let's just recap and update some of the layoffs that we've seen so far. And here's just a snapshot of some of the bigger layoff announcements here. This one happens to be out of CNN. We see listed here Alphabet, Microsoft, Vox Media, BlackRock, Goldman Sachs, Coinbase, McDonald's with some white collar job layoffs, Stitch Fix, Amazon. And that's just tip of the iceberg. You know, those are just some of the major ones, some of the bigger announcements. And that article didn't even get into all of the other bank layoffs from Wells Fargo, a lot of the mortgage banks, and a lot more. And look what's happening now. A lot of the people that were laid off are selling their stock that they got during the time when they were employed. Laid off Silicon Valley workers are panic selling their startup shares as valuations plummet. But it's interesting how these people that are laid off are now having to resort to selling off their stocks because they see that the stock market's not really that strong anymore, and they're worried now with being laid off they may not find a better job, and they better sell the stock now before prices go even lower. Out of the Express over in the UK, global financial crash warning, world risk economic collapse as US nears debt limit. Yes, if the debt ceiling is not increased, then it would be Armageddon overnight. 6 million jobs, it says right here, 6 million jobs could be lost overnight if the US were to default on our debt. Now, just sit back for a second and think about that. We have to have ever increasing amounts of debt. We can never stop going further into debt. Otherwise, it's going to be a global economic collapse. And that's out of the Express reporting that. 6 million jobs lost overnight because the U.S. stopped going further into debt, right? How crazy is that? Right? And think about the system of money that we have that allows this. It's only because the fiat dollar is not backed by anything that even allows this to be in existence in the first place, right? And this really goes to show you how sound money can really change our world. 6 million jobs are going to vanish overnight if we don't take on basically endless amounts of debt. So how do we get here? Well, we got here in 1971, but it even goes back further than that. But 1971 was the moment when the dollar got depegged from gold. But even up until then, it was fractionally attached to gold. They kept lowering the amount, the percentage, or the ratio on how you could redeem gold from each US dollar. And it's no coincidence that the cost of living has skyrocketed, especially since that time, since the dollar was depegged from gold. And it's just a matter of time before the dollar is going to be depegged or dethroned as the world reserve currency. And we've got many countries out there now coming up with their own trade agreements outside of the US dollar. And it used to mean that the might and force of the US military would confront these nations that tried this. But right now, there's too many nations, these BRICS nations, and even more nations are coming on board with this. They're tired of being bullied by the United States and tired of the United States exporting dollars for real goods and items. If there's one thing that the U.S. is really, really good at exporting, and we lead the world in, that's exporting dollar-denominated debt to the rest of the world. Well, if you look at all the combined populations of all these countries that are coming together, and just the BRICS nations, that's Brazil, Russia, India, China, and South Africa, but there's more coming on board. But just those alone, the population takes up most of the world. I mean, just look at China. You have about, 1.4 billion. America, we're under 350 million. So just China is quadruple the number of people there as we have here in the United States. Now, it's interesting what other entities here are laying people off, because we just looked at an article here out of CNN. CNN's laying off. Vox, of course, we just talked about them. Washington Post and other U.S. media giants announcing layoffs amid economic gloom. And this news organization decline in employment's been ongoing for a pretty long time, but it's going to accelerate here. And it even says here, newsroom employment has been on a steady decline in the United States, falling from 114,000 to 85,000 journalists between 2008 in 2020. Right, now let's move on to another topic here. And this is another example of the ongoing wealth transfer. What do we see in the crypto world? Talking about cryptocurrencies, Bitcoin, etc. We saw massive holders of these digital currencies sell all at once and cause a major crash or decline in cryptos. And the name we give these institutions and billionaires, we call them whales because they're so big and they can actually move the markets when they all sell in unison. Here's some information here. Billionaires and hedgies, that's hedge funds, all decide to sell crypto at once, causing the collapse. Whales work in unison to move the markets, and the little guy gets crushed. And here is a news story that gives the perfect example of this. All right, and this was put out at the Daily Coin and some other news outlets. Billionaire Peter Thiel's fund sold all of its Bitcoin last year. Last year, before the big drop occurred, remember Bitcoin was coming up about $70,000. And does anyone think it's a coincidence that a lot of these billionaires and big institutions, hedge funds, etc., all get out before the big collapse? If you think that's a coincidence, well, maybe you bought when Bitcoin got close to 70,000. But I would be buying right now. Actually, I am buying crypto right now, and I bought some what I think is the dip because I think the billionaires, the whales, are going to come back in and push crypto up once again. Now, it's a dangerous path to walk down because these exchanges going down and going bankrupt, right? So you may make some money, buying this what I think is the dip, but also you have to navigate, walking through a field of landmines, right? Because is your exchange even going to survive? Because there's so much things happening behind the scenes that people don't realize. And it's just a microcosm of the overall banking system, right? So, do these exchanges even have anything, or is it like the regular banks that they actually don't have the money? Once you put your money into a bank, it's gone, it's loaned out, and people think that they're going to be rescued by FDIC, as far as regular banks go. But FDIC only has a small fraction of all the savings and deposits that they're supposed to be insuring. So they're supposed to be insuring $9 trillion worth of deposits with just a few billion dollars. And I think if some investigations were done into some of these crypto exchanges, I think they would find that these exchanges are also, doing some not so honest things over there. But I still think they're going to push the price back up in cryptos. And one example, just look at Bitcoin. It was down in the 16,000 range for a while. We're up closer now to 23,000. So to me, it looks like the bottom's in. I don't go very big on these investments. So if the entire industry goes under, I'm not going to be wiped out. I'm not going to be hurt that bad. But some other people out there, for example, Peter Schiff, they think that Bitcoin's going to zero and that the entire crypto industry is going to be completely decimated and become extinct. And he basically compares it to the fiat dollar, where these cryptos aren't backed by anything. And if you look at the true meaning of the word backed, well, they're not, just like the dollar is not backed by gold anymore. And what he means is that there's nothing physical or tangible that's backing these. There's, of course, the blockchain that a lot of people think is the future, and I think the blockchain in general will be the future. But I think there's going to be currencies now backed by gold, but they're going to use blockchain technology because we can't go away from the digital transactions of banking and finance because so many people now depend on their phones. And while I do think that hard assets, gold and silver specifically, are going to come back to play a role in the financial system, I don't think it's going to be everyone holding physical coins. I think there's going to be some sort of blockchain, and that's going to be the foundation or the system that the financial system runs on. But I think ultimately we're going to have to back it by gold and silver. So you're still going to see the values of gold and silver go up, in my opinion. In fact, gold's been doing very well here lately. We've got gold back up over 1920. That's 1,920. And remember, central banks have been accumulating gold like we've never seen over the past few years, while at the same time, financial institutions are keeping the price of gold and silver and precious metals suppressed. So I'll let you guys out there figure that one out. So they're keeping the price suppressed through the paper markets, derivatives, etc., while at the same time central banks accumulating tons and tons and tons of real physical gold. So you think something's going on there? I think so. So what do we do to fight back against this? Keep stacking, because the more you can purchase the physical item, the better off you're going to be. One, and two, you're fighting back against the manipulation. Right. So think about if everyone went out and bought a few ounces of silver. We're talking about everyone, the whole, let's say the whole population of the United States that is old enough to make that transaction. The physical price would go up so fast, and it would detach from the paper price, which is the manipulated, beat down price, that people would really start noticing. And I mean, it's already noticeable for those of us paying attention how there's a disconnect between the physical and the paper price, or the digital price that you see online when you look at the price. But if everyone did that, then it would be even more noticeable. So that's what I say. Keep stacking, and keep focus, because this is going to be very, very tough times ahead for a lot of people. Not everybody. Hopefully, we'll be ahead of the game, ahead of the curve, and able to finance and able to navigate these waters here. Thanks everybody for being here. Big love. Bye for now. Keep stacking, and peace.